stock retail from Twitter. Um, Longtime AMC ape, almost 2 years now. And I wanted to do something a little different. I don't tend to do YouTube or anything, but I wanted to share some information that I think requires kind of going through some screens. And so thought maybe the best way to do that is to share a screen recording. And the easiest way to do that is out on YouTube. So I'm going to share this just to set it up a little bit. Just want to share, I think one of the big triggers for me has been, well, really two. One of those is I want to look at the forward view for AMC for myself. I want to know where's it going. And actually, frankly, I'm a movie enthusiast, so it's not just even about the squeeze or AMC's business. For me, it's about what movies are coming, and that's pretty exciting, and we're going to go through that. And then the other thing that I think is pressing in our faces as apes is I'm seeing a lot of lies about AMC's cash position and cash outlook. And so I'm going to walk through and I'm going to be very transparent. I'm going to share my assumptions. I'm going to share why I come to certain conclusions about what cash AMC is going to have and when, how the business is going to go, what earnings will look like, revenue growth, expenses, all of that I'm going to go through. I don't ask that you necessarily, as a viewer, as a listener, agree with me. I ask that you even bring your own thoughts and you decide on your own due diligence, right? We always say do your own DD, how you feel about this. But what I wanted to do was arm people because I do have some background looking at financial information and translating that into what I think. And in stock investing, we talk a lot about having logic, having a thesis. And so you'll see a little bit of what my thesis is. I mean, and let's be honest, the shortest, simplest way to explain it is I do believe AMC is going to outlast the shorts. I do believe they have plenty of cash uh, and that they are not going bankrupt. I mean, that's super simple. And so eventually shorts will have to capitulate. They'll have to give in. But let's, instead of just saying that on spaces and saying, woohoo to each other, let's go through some hard data and look at that and see why is this case. So if you want to use that, um, for yourself, for your friends, however that looks, let's dive in. So, oh, and then of course I'd be remiss if I didn't say, I am not a financial advisor. None of this is financial advice. I am just an ape sharing his point of view and attempting to explain why it's my point of view. And then I leave it to you to do your own due diligence, make your own financial decisions, and come to your own conclusions. Okay, first things first. So 2023, and by the way, I'm going to share links at the end of this as well. And I'm going to probably post this, of course, on Twitter because I'm more active there, but I'll probably post this on Reddit as well. So I have gone through literally the entire list of published movies for 2023. So here I'm showing you just 12 of the biggest, and actually, if you can see at the bottom, there's a list of quite a few more. So I mean, frankly, there's a lot to be excited about. I mean, Avatar: Way of Water is going to be huge. We all know that. And by the way, that of course is a 2022 movie, but it's coming out towards the end of December. And so part of my process here has been also to forecast what domestic box office revenues would be, what global box office revenues would be within each period. So a lot of Avatar revenue will be in Q1 of 2023. So that's why I'm showing it here. And we'll talk more about that as I go through my forecasting process. Similarly, you see that Aquaman is not showing as one of the big movies here, although you see it at the bottom. Um, that's not a big 2023 movie in terms of revenue. Of course, Aquaman's going to be huge. I'm excited about Aquaman. Um, but it's releasing, I think that's like Christmas Day or something, or maybe it was even later. So it's only got a few days of revenue in 2023. So that kind of tells you a little bit about part of my process here, and even by quarter. If something's at the end of Q1, I assume some revenue in Q1, and I have my own process for saying, okay, how much of that revenue rolls over to Q2? And I've actually been tracking all of this myself, frankly, day in, day out for the last few quarters. So I've started to get a feel for, like take Elvis, Maverick, stuff like that, where they released last quarter, this quarter, they've been amazing, still huge. So um, that's one thing. But just real quick to get excited, take a look at this list. We've got Rogue Squadron coming, Guardians of the Galaxy, Indiana Jones, Mission Impossible, Mario. Frankly, my house, I've got three kids. There's a lot of excitement over the Mario movie. And if you don't know, that's being made by Illumination. So same people who just had the huge, Minions Gru movie. Chris Pratt's in that, Jack Black, some other folks. So that one's, in my opinion, going to be pretty big. And I'm tipping my hand here too. I'm showing you what I believe are some of the biggest movies. So if you look at the bottom, like maybe you think Ghostbusters or Transformers or something is bigger than some of these. So some Marvel movies are coming out. Super excited about those myself. Trolls is going to be huge in my house. Hunger Games, of course. Excited that's coming back. Fast and Furious. I think Little Mermaid live action. Personally, I'd say don't sleep on that. I went back, by the way, as part of this process for all of these, and where I could look at franchises. And again, I'm going to give you links, but I have looked back at history on, for instance, um, how did the other Trolls movies do? How did the other Hunger Games movies do? And live action Disney has some really big hits. If you look at Lion King, obviously was kind of the biggest. Aladdin was huge. And on Little Mermaid, I was a little conservative. In fact, you're going to hear me talk throughout this video about being conservative. I've attempted to not spread hopium through my forecast, and really, in many cases, I kept kind of whittling it down, whittling it down. But nonetheless, if you go look, I'll put that link out there later. You can find out basically just how big some of these were, and I think they're going to be huge. And frankly, then I'm even looking at Mission Impossible and thinking how huge Tom Cruise did with Maverick. I guess I'd tip my hand personally and say I don't think it's necessarily going to be as big as Maverick. Almost nothing will be. Um, but I do think he's got a lot of heat right now, and that's going to be a big movie, and I'm personally excited to see it. So you see, there's a lot of big movies coming, and then let's just talk numbers a little bit at the top right here. So now you're getting a view of my forecast. So it doesn't basically the 2022 list here at the top right is factual. Those are actual numbers, but the 2023 list would be my forecasts. And again, I said I base that on history. I actually, if you don't know, or if you haven't followed me a while, I have a background in forecasting. I maybe won't say too much so I don't dox myself too much, but I know a thing or two about forecasting, let's just say, and how to look at history, how to use trends, and how to kind of look out in the future. It doesn't mean I'm right. One of the things most forecasting leaders will say is if you have a forecast, you're wrong. So I say that with a lot of humility, but just want you to know at least maybe there's some credibility too. And I suppose I should say neither am I a movie industry expert, but I've been forecasting movies now pretty seriously for probably 9 months in my own sort of local spreadsheets and getting pretty accurate with it. Um, Maybe that could be shared some other time. So I digress, but let's look at 2022. So if you look at the really big movies, let's say domestically, so just US box office, $300 million dollars and up, there were six of those. And so Maverick was the great example. Obviously, really, really big. In 2023, I'm forecasting we almost double. So 83% uptick in those, where we have 11 of those. I mean, and you're looking, most of those are here really on the screen. And so sort of tells you that I think some of these will be, $300 million and up domestically. And I think that holds up. I mean, if you see Minions, Thor, this quarter, those both were well over 300 million. And if you look at this list of movies, I think it's not hard to argue these are, as big or bigger in some cases. And Avatar obviously is going to just, I think, blow the roof off. Um, Funny enough, I might be the most excited about Indiana Jones 5. It's awesome that Harrison Ford came back, and that's going to be a fun one to see. And so I suppose I'm counting on some nostalgia there myself. But I think there's one thing I've noticed as I've gone through looking at movies is when there's a franchise, it tends to, as long as that franchise is maintained well, it tends to grow over time. The movies actually get bigger, not smaller. So you can see why Hollywood loves franchises. Um, in the sort of 100 to $300 million range, you can see we more than double. So there's nine more movies in 2023, I believe, that are in that range. A lot of those are listed at the bottom here. I'll just give you a few examples from the bottom here. We've got the Disney Haunted Mansion movie. Dune 2 is coming. There's a few DC movies you can see, Shazam and Blue Beetle. Um, there's a few big ones. I mentioned Aquaman. Star Trek also is another one where most of the revenue will be in 2024. because it's coming at the end of the year. But like Meg 2, Blade is getting a reboot from Marvel, Scream 6, and there's a whole lot more. So I'll link that at the end too, so you can see how to go just look at all the movies coming out next year. And then in that 50 to $100 million range at the top right, you can see in 2022 we had 12 of those. In 2023, I think we have maybe 18 of those. So each of those, you can add these up. So total of what 45 movies across those three buckets in 2023 versus only like 25 in 2022. So there's more movies and there's more big movies coming. And so that's, you can imagine for a movie theater, that is a good thing. So let's just look at the full year outlook. So already I'm kind of, in some ways, jumping to the punchline, although we're not yet talking about cash. This is just kind of earnings we're talking about here. And I'll walk through again, what I'm thinking, what I'm seeing. So on the total domestic box office, and by the way, I have a process because domestic box is easier to get to, and there's a lot of websites for me to look at. I have looked over time at what AMC's total revenues do. So, we've got Odeon, there's AMC around the world. So, especially in Europe, we know that in Saudi Arabia, they're paying the license fee to use AMC's name. So, AMC has a lot of international revenue. And I have looked over time at, if you look at the domestic box office, you can kind of figure out what AMC's global revenue is going to be. And then, of course, I've made assumptions based on trends. But so that's why you're hearing me talk a lot about domestic box office. It's not that I'm just trying to be America-centric here. So please know I'll be looking at AMC's total. The domestic box, I'm forecasting a 19% growth in 2023 versus 2022, which means, by the way, of course, you're seeing that I have the rest of 2022 forecast as well. We haven't landed the plane on that. So you can see my view of 2022 is about 7.1 billion, not quite. Whereas 2021, I think it's maybe over 8.4 billion. So right there, you want to ask, do I really agree with this guy? You know, do I think it's even bigger? I would tell you, I do think I'm reasonably conservative on that. There's still a lot of movies that aren't even announced, but I'm getting ahead of myself. We'll come back to that. So what's driving my projection of 19% growth? So first of all, there is increased film count. I just showed you how I believe there's more blockbusters, but also there's more sort of other films. I have the full list, excuse me, of movies that have at least been announced as, being widely released in theaters. I don't know if you can hear my dog barking. We've got a beagle and she tends to bark at anyone walking by, but hopefully you're not hearing her too well. Anyway, I've got that full list, but what's interesting is that list, I think I've got, I don't know, maybe 87 films, but we know on the year there's going to be more like 400, and I just know that because of history or whatever. So I've got to go double check that number. I just pulled that one out of the back of my mind, so maybe that's incorrect, but we'll see that as I go through this presentation. But so there's a lot of movies that aren't even, announced yet. And so I've had to make some assumptions again based on history. And so for this, what I'll call other bucket of movies, I've been very, very conservative, not really growing that too much. But I do believe there'll be more films. And you've seen me, if you follow me on Twitter, kind of talk through the Hollywood supply chain, if you will. I'm going to show you some graphs on that of how many movies there's been over time. And there still are significantly less movies right now than what we've had in the past in terms of just how many are out there at any one time. But because of the success of so many movies, you're seeing, look at Maverick recently. Gosh, I've lost track of how many weeks it was theatrical only. But I mean, it was very, very long. And even now it's streaming. You can pay to watch it streaming, but it's still selling in theaters as well. I think yesterday, at the time I'm recording this, yesterday was almost a $500,000 in the US. Sorry, not a half a million. Yeah, $500,000 in the US. And so because of the theatrical success of a lot of movies in 2022, it's actually this fourth bullet here in the drivers for my growth forecast. A lot of studios are committing to increasing the amount of films that are theatrical only. And so they're committing to theatrical windows. And personally, I think The Matrix was a great example of that, where Matrix was streaming the same day it went in theaters, and it really wasn't that big. And that was kind of at the same time as Spider-Man. Now, of course, who could really keep up with Spider-Man? That's a huge, huge franchise. But in my opinion, Matrix should have been probably three, four, maybe even five times as big as it was, had they committed not to streaming it right away. And I see studios learning that lesson personally. So that's another driver, just the success in 2022, which is yielding more commitment to theatrical windows. Um, and then the other thing, so the third bullet in that first section, in Q1 and Q2 of this year, there were actually a lot of COVID headwinds. I live on the west coast of the states, and I can tell you the state that I'm in, we had our, excuse me, largest spike of all of COVID actually was in Q1 of 22. And I know that in Europe, there were still some lagging results, in particular because of COVID headwinds. So that's another driver of the growth in my forecast of if in Q1 of 2023, you're not looking at a lot of COVID problems, and I'm sensitive to, we each have different points of view on that. I'm not suggesting at all that COVID is a non-event. It's been a big deal. People in my family have gotten it and it's been rough. Um, but I'm just speaking purely in sort of forecast terms here. I'm assuming in 2023, COVID is mostly a non-issue. Um, I guess you can decide if you agree, disagree with me, but that would be a driver in why I think there's growth in 2023. Okay, so then what's the total revenue? So you can see that while I'm saying the movies, let's say, are growing 19%, AMC's revenue, I'm saying, is outpacing that, growing 25%. Okay, so why? So first off, AMC in particular, I'm forecasting a little more international growth, excuse me, outpacing that. That's a domestic growth number of 19% there. But, I talked about those COVID headwinds. Those were a little heavier in Europe than in the US, but also currency headwinds. So AMC translates their Europe ticket sales, food sales, etc., back into dollars. The AMC is a US company. So anytime you're an international company, you have sales overseas, you translate that back into dollars when you file with the SEC. And so this last year, 2022, this current year, uh, the euro dropped considerably, uh, in relationship to the dollar. In fact, it's all the way down to pretty much parity, I think. I haven't checked in the last few days. But that essentially looks like a cost in some ways. It's a drain. That's why I'm calling it a headwind. It's a drain on your revenues because now, let's say you sold a 10 euro ticket last year in 2021, and now in 2022 you sell a 10 euro ticket. Well, last year that meant more like, I don't know, $12, maybe $11.20 or something. And this year it actually means like $10. So that one ticket you sold is now worth $1.40 or $1.20, let's say, less, um, in 2022 than it was in 2021. And so that put a drag on AMC's revenues and on any international company's revenues. And that's why you hear, by side note, that's why you hear a lot of talk about the dollar and its value against other currencies. Um, that's another conversation for another day. So again, here I'm suggesting that in 2023, if 2022 in a way has already sort of eaten the pain of the euro moving down against the dollar, then it's more steady in 2023, and that's called anniversarying something. So now year over year, you have a more favorable comparison, and so that's why then the international growth might look a little better for AMC, in my opinion. And then actually we have to consider, Maverick was, while it was absolutely huge internationally, it still was more heavily a US movie. And that was a lesson I learned in my forecasting. I actually got Q2 a little bit off. I was a little too bullish in Q2, and I hadn't thought through both of the foreign exchange headwinds and Maverick being a little more heavily leaning to the US side. And so that's where I kind of learned to change some of my assumptions. But for 2023, that weighs favorably because now, if maybe you're done with some of those shifts negatively in foreign exchange, and maybe, while Maverick was awesome, I went to see it three times myself. First time I've ever seen a movie three times in the theater. It was awesome, but it was a little American, let's just be honest. And so there was a little less international attendance. So that drives a little more growth in 2023. And then I will talk a lot about, not a lot, but I'll talk about popcorn. We joke and we kind of say it affectionately, but obviously legitimately, I am looking forward to the distribution of popcorn, what I'll call wide distribution. Um, and the reason is, so now, you're hearing one more thing that I believe, which is there's thousands of grocery stores, right? And if you even had, I'll just completely make up a number here, 10 boxes of microwave popcorn inside of thousands of grocery stores, you can imagine, you start doing the math, how big that can be. And so I've done some research on the size of the industry, just like the popcorn industry, um, and what I've made some assumptions on what percent of that industry I think AMC could grab in 2023. I've kept it very small. I'll talk about that a little more in a little more detail later. But that is one of the things that's, you're going from zero, basically. So any popcorn revenue is outpacing that 19% domestic box growth because it's 100, well, it's infinite growth, basically. It's from zero to whatever you land on. Excuse me. So that is also why AMC's revenue, I believe, will outpace the domestic box office, which, hey, kudos to Adam and the team. If you remember, he hired also a vice president from Frito-Lay. Hope I got that right. That's based on memory. But he hired a vice president from the food industry to help roll out the popcorn implementation. So I'm excited about that one. But I've kept it pretty tempered, and I'll show you that. I'll show you the details of that in a few minutes here. And then the other thing is, I think, um, growth in merchandise, and there's sort of an other bucket, like increased use of AMC on demand and things like that. You've seen I try to get the word out on that. I feel pretty strongly if you're an ape and you're renting a movie at home, I have no idea why you wouldn't rent it from AMC. Why not give them the revenue? I learned how to do it. It's super, super easy. It's on most platforms. I've got it on my Apple TV. I've got it on my Samsung TV. I've got it on a couple other devices. So anytime I rent a movie, if it's not on one of my streaming services, I'm like you, probably I have quite a few streaming services, but anytime I've got to rent a movie, I always rent it from AMC because why would I not let them have my revenue? And I think that's going to grow. I think more people will start to understand that that's out there, get a little more brand recognition. And then also, if you hadn't seen, I know in now I don't remember if it's 2022 or if it was even 2021. There was some hiring going on the merchandise side, and there was even kind of going to be some growth of sort of a digital merchandising space for them. Just think of going online and being able to buy their product. So it's not very big, but it's outpacing in my mind that 19% domestic box office. So overall, that's the 25% revenue growth, but of course there's expense growth to go along with that. So what is their earnings? And I'm going to talk through the expenses as well here in a minute. Um, so the total earnings, I'm actually forecasting a positive year. First positive year post-COVID. A little risky for me to say that, I suppose, but I'm walking you through all my assumptions and how I get there. Not huge, $36 million, but huge if you consider the, let's say, the mental battle that Shorty is trying to take against us. Um, for the first time, I didn't realize, I got some friends who are obviously going to laugh at this, but I did not mean to have 6.9% earnings per share. I just saw that, and obviously I understand why that's funny. But so you can all laugh at that one. Um, but anyway, that does translate into about 7 cents of earnings per share on the positive side. And so why? So I talked about improvement in the box office, both domestic and international. I talked about popcorn, merchandise, AMC on demand. But also, here's the key, and I'm going to hit this in more detail. It's my belief, and not just belief, I'm looking at actuals. I've got history all the way back to 2018 that I'm going to show you. It's my belief, and the actuals prove out, that AMC's got a pretty heavy fixed cost model. And what does that mean if you're not a finance person? Fixed, as in like stuck, let's call it, or set. So if you are a big movie theater company, and let's say, for instance, you have rents that maybe are contractually written up. And so let's say that for 2023, those rents are going to be fairly steady. Certainly I've got some assumptions in there, but I think there's some confidence I've got behind that. Um, so if your rents are steady, and that's a huge, huge part of your expenses, then what happens when movie sales go up? And by the way, we're all in the middle of inflation, right? There's been a lot of news this week, CPI, PPI, all the inflation metrics. Well, what do you think happens when ticket prices go up, but your rent doesn't go up? So you got to consider, I think, with AMC that interestingly, they're poised to profit off of inflation. Now, I say that sensitively as well, right? There's some of us who are going to struggle putting food on the table, putting gas in cars. I've told my story. I guess I'm getting off track a little here. I am the child of a single mother who had no college degree, and I literally can remember. I was young in the early 80s. I remember exactly what we're starting to walk into, or maybe I hope it won't be as bad, but it was very high inflation, high unemployment. There were months I remember my mom exactly thinking through, how do I have enough money for both food on the table and gas for the car? So when I say that AMC is going to profit there, I'm not saying that in any kind of heartless way. I know what it means that we're in high inflation right now, and I know how that's going to hit some of you, and I feel the heaviness of that. But that said, I want us to win, and I believe strongly that AMC is poised to be a company that will actually benefit in an inflationary environment. So keep that in mind. And by the way, especially keep that in mind when Shorty tries to give you lies, because I think AMC is about to step into some profits. So anyway, they've got this heavy fixed cost model, which means any improvements in revenue outpace their expense growth. And then we've seen over the last year, so kind of final bullet here, they've had improvements in their debt load. Shorty loves to talk about the debt. For me, it's always, can you maintain your debt? That's it. So it's like, I have a house payment. That's debt. I have never been concerned about it because I make my payments and I have for years and years and years and years. If you have debt that you can maintain, that you can, some people in finance will call it service your debt, um, it's it's a non-issue. And so I'm going to walk through why I'm not concerned about their debt. But that said, it's actually gotten better because if you look at the last couple of quarters, there's been a refinancing Adam led the team through. And there's been also a little bit of debt pay down. Small as a percentage, but great because that means in the future that's straight to the bottom line. That's less debt payments. So some wild cards, a little smaller. Always read the fine print. So some fine print at the bottom of this. Any issuance of APE in 2023. Adam said he wouldn't do it in 2022, but we all know that there are reasons that he's got APE in his back pocket, and frankly, some of us love those reasons. So any issuance of APE for strategic mergers and acquisitions would significantly change revenues, the balance sheet, all of that. So I don't have any forecast about issuing APE, or if they issue APE to clear debt. That would also significantly change because I do have a forecast here that shows them carrying their expenses through and managing those expenses. I'm sorry, not expenses, debt. So if they were to pay down debt, that would greatly change some of these numbers. So what I'm saying by that bullet is that's very bullish because anything I'm about to show you is blind to any ape being issued, is what I'm saying. Okay, so then the other thing is if there are movies that are not yet announced. So I mentioned to you I have like a list of, I don't know, 87 movies. Pretty much the big ones are known. I mean, and I showed you those. The marketing machine is already kind of kicking its way into gear for 2023 and obviously in full swing for Avatar. Um, but if there's movies that I don't know about, and there have been a lot of those this year in 2022, one one just showed up. I was laughing with my friends. There's like a completely violent like Santa Claus movie coming out. AMC was advertising that today, and just kind of had a laugh at the idea of Santa kicking all the bad guys. But I didn't know about that movie. So if there's any larger movies or even just a lot of smaller movies that I don't know about yet, and there are. Now, I've told you I still tried to forecast what I think those will do um, based on history, based on trends, but there's potential upside if there's some surprises, is what I'm saying. And then I did not count, so final bullet, I did not count on any growth in alternative content. So, comedy, um, concerts, sporting events. We've seen Adam kind of dabble in that. I know someone was just telling me today that there's a Coldplay concert that's going to be showing in theaters. So my daughter went to a BTS concert this year. That was a lot of fun for her. So if there's any more alternate content in theaters, then that would also, I have not assumed that. So that would be upside to my forecast. Okay, I want to talk cash. This is really the big one. If you need to pause because I've been talking a lot, pause this thing, get your drink of water, whatever, and come back because I think this is the one that I'm the most kind of hot and bothered about with Shorty. And So, but it's also what I really need to head off here. Say at the top of this is it's a little harder to forecast cash. The earnings that I just talked through, the revenue, I'm going to be wrong on some of that, and either it's going to be a little above or a little below what I'm saying. Um, but I'm giving you a directional, you know, estimate. But um, cash is going to be a little tougher because that gets into some of the ways Adam and the team will manage, day to day, month to month, quarter to quarter. But I'm going to talk through this. So based on everything I just showed you, and actually first, let me flip to a spreadsheet here. And so you can see actually, so I'm not going to show you how the sausage is made, but you'll see a little bit of it here. Um, this is actually on a little bit of detail I've got. You can see just tab after tab after tab. I've got their balance sheet, I've got their P&L, that's an income statement, way back. And some of these I didn't record here, but that's because I've got it in some other tabs, and there was a purpose to this particular tab here. But what I want you to just see is the level of thought that's gone into this. And by the way, that you can go get all this information yourself. I'm going to show you how to do that too. All of this that you're seeing on this page comes from AMC's financial filings. This is directly from filings with the SEC. So you can see how much money they were making on admissions, concessions, obviously there's been nothing for popcorn yet. Um, I'm not going to show you to the right because then that does get into the sausage making. I suppose you can preview that I think there's about 1.8 billion in revenue. I think that's actually a little light. I think it'll be a little higher, but for the quarter we're in right now that we're about to end. But here's what matters. So you can see I've got the history on expenses. I'll talk through that a little bit. All this blue and gray areas, expenses, their income taxes, all of that. But let's jump down to cash and talk about that a little bit. Okay, so you can look through and you could find all of this. You don't have to trust me, bro. You can check this in their financial filings. What their current assets are, that's just one uh, look at their liquidity. Obviously, current assets is not itself cash, so you can also see um, some information about cash I'm showing here. And in other, I've got a full, gosh, I've got their balance sheet here. So this is what I'm talking about. Sorry, my computer will be a little slow. We jump over to the balance sheet, you can see a lot more detail, right? So you've got cash and equivalents, restricted cash, blah, 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 blah. So sometimes when I put out these scorecards, some of you have seen, I'm using pieces of their income statement and their balance sheet and all of that, and I'm tracking this. But there's just a piece of this I want to show you right now. And Shorty, I hope you're watching because I know you've been lying. So I'm looking at the shift of their current assets over time. And so, like you may remember, Q2 of 2021, when Adam had the earnings release and he said, hey, we've ended with the most liquidity we've ever had. And so you can see like that 2 billion here that I'm hovered on. And then you can see kind of what's been happening quarter to quarter. And again, this is all in their filings. So you get like, what's their cash flow from operations? So it is true. Hey, they've been losing money. That's true. They're obviously 21 was really tough. That's major, major COVID headwinds. Spider-Man comes out. We get the positive. And by the way, you can see what's that total domestic gross up here. Maybe I'll even just scroll and get that a little closer to you. And so, operations. So cash flow from operations is basically telling you what did it cost or make them to essentially have their doors open. And there's kind of a concept in finance when having your doors open makes you money, you're going to keep your doors open, right? That's pretty simple. So the question for them is, are they going to get there in time? And that ultimately is the heart of the short thesis. Shorty is still trying to tell you they're burning too much cash. It's a sinking ship. Get out, get out. I'm trying to tell you, no way in heck. They're not going bankrupt. Stay in, stay in. And that's, I'm putting my own money where my mouth is on my portfolio. When Well, I won't go there. Anyway, so you can see their cash flow from operations. The Q1 is historically the lightest quarter, and that kind of holds out. So you see Q1 21. Well, that's really COVID, big loss. But Q1 even of 2022 was kind of a big loss again. But there's more to the story in cash as well. You see that's operations. But what about investing? And you see borrowing, and then I talked about foreign exchange impact. And so you can see when I said, hey, recently there's been bigger impact. Look at Q2 right here. $16 million impact. So it's acting like a loss in their cash just because the euro went down. Um, and so that's where I'm suggesting you start to anniversary that. So if you compare Q2 of 2023, then I don't think the euro has a bunch further to go, and so now it gets to compare to this quarter. So that's going to be much more favorable. And so then I've got this number here of what was the change in their cash quarter to quarter. And you might say like, um, shucks, I just showed you one quarter forecast. But how could they go up $1 billion when operations cost them? They lost money that quarter. Well, it's borrowing. So you can see this cash and borrowing. Then we remember that. That's when Adam got more debt. That's really what that is there. So if you're burning cash but you're going up in cash, that's because you used it in operations but you took on more debt. And that's Shorty's argument. Like, let's just be honest. We don't have to hide from that. But I think Adam was strategic. And when I say Adam, all credit, especially if any of you ever watched this, all credit to the entire executive team, the board, the C-suite, the directors under that. I couldn't be more proud of you guys. You led through, frankly, I like to say these guys led, a whole year of COVID before apes even showed up. So, I just hope you're all standing up and applauding these guys because, we like to say apes saved the company, and that's true. But my friends know I like to say two things can be true. It's also true that this team saved the company before we did, in my opinion. They navigated it through the darkest of times, kept it afloat, and thankfully we came along and joined the team. And now together we're taking it to the finish line. So I'm just super excited about that. Sorry, got a little got a little passionate there. Um, so I'm just showing you the level of what I'm looking at. I'm looking at their cash flows over time. I'm looking at their expenses. Again, these are actuals here. This is all from their financials. And then what does that translate to for the future? So now let's come back. So I believe, and you'll see this is all forecast now. Um, I'm not showing the actuals. I'd have to make these lines go back farther. So you can see I'm saying at the end of Q2, um, sorry, that is actuals. The beginning here was actuals. So this is a number from their balance sheet. So what was their cash and equivalents? It's basically like what did you have in your checking account for the most part. And so, I am showing that in Q3, we will track down further. In Q4, we'll go down further. In Q1, we'll go down further because of the timing of what movies there are, how many movies there are, what that means in total box office, the fact that popcorn's not out there yet, a lot of things like that. So I do think we're going to see these next 3 quarters have negative cash flows. And I am completely fine with that because then look, we don't even go below a $500 million, right? And that is without using any lines of credit. By the way, AMC has open lines of credit. If they want to, think of it a little bit like a credit card for a business. If they want to use those, they can. Banks have already extended those to them. Additionally, Adam could go, recently he's paid down a bunch of debt. He could go back and say, whoops, that'd be a bummer, but he could say, whoops, I need some to increase my debt again. And I believe because of the health, let's say the increasing health of their business, he's got friendly banks who will do that. So if you're not even going below a $500 million, of course, that's just retail's forecast. That's my forecast. But not even going below a $500 million without using a line of credit, without restructuring any more debt, um, and without issuing any APE. That's one of the reasons he said checkmate, guys. He's got in his back pocket the ability to be debt free and basically surprise Shorty just one morning, just say, oop, well, we did it. So I have no concerns over their cash. So all these articles from, well, maybe I won't name them just now, but you guys know who the sources are. All these articles that just nonstop talk about AMC's cash burn and cash problem. I'm actually saying we bottom out at the end of Q1 23, and then it's up from there. And so what does that up look like? So you can see here on the right, here is that quarterly change. So you can see based on my forecast of what movies are out there, how they're going to do, AMC's expenses, all that I've been kind of talking you through. I can forecasting losing about 200 million I'm sorry, that was last quarter. Losing about 100 million here in Q3, about 150 in Q4, and about 200 in Q1. Q1, like I said already, Adam was right. That tends to be pretty light on movies. Um, but then look at this. I think we get back to positive cash flows all of the other three quarters in 2023. And let me just go back. You got to keep coming back to this. Um, I am not basing that on wild guesses. I went line item level, movie by movie, and forecast what I believe. And some of that, by the way, I also combined with industry experts. You can find some good sources out there where people are making their own forecasts, and these are insiders, industry insiders. And then I've taken over time, kind of who's accurate, who's not accurate, and even coming up with my own forecasts, and pretty darn accurate myself. Like I think on Minions, I think I was only off by right now. I'm sitting off by like $4 million. It actually did better than I said. Thor is like maybe $1 million better than I said. I mean, I was really, really close on those. There's others I've been way off, but they've all been to the upside. So I guess one thing you can take away from my forecast is I've tended to be conservative. Maverick, for example, and I've never had that carrying over into this quarter as much as it did. Elvis, in particular, was a really big one. I did not see that having the legs it did. And so I love that movies are doing better than I've even forecast. So, that's not based on me making stuff up. It's based on actual performance of actual movies. That's what's behind this. And so I feel pretty strongly that 2023 is going to look really, really good. And frankly, even if this looked a lot worse than what I'm saying, go back over here. Let's say, so I'm suggesting they end the year with about 800 million in cash. I could be off by 800 million and they're still at zero without using a line of credit, without using new debt, without using APE. And, they're not dipping below zero to where have to go find the money. Um, Getting to zero in cash would be insane. So I'm not suggesting they would do that, but I'm just giving you the extreme example to say I'd have to be off by an awful lot for them to have a real problem. And so even if you wanted to be bearish, there's no way you can argue there's any real problem in 2023, or frankly 2024 for that matter, and as far as I'm concerned, ever. Um, so it's just case shut on the short thesis. It's just not even close. And that was even, again, this is without a I mean, ask yourself what happens if he issues you know, to pay off debt. They do not have a cash problem, in my opinion. Uh, and so that's where I want you guys to gather and collect all of these articles that are basically telling you AMC is at risk of going bankrupt, AMC is at risk of running out of cash, and I want you to just be flooding the SEC with those. Frankly, I've lost all faith in them, but I want people to know that we know that they've been lying about cash, and I've got plans on how I want to handle that too. But anyway, regardless, even if you just want this for yourself, I don't want anyone that I know being misled about AMC's cash flow and cash outlook. And so overall, so I'm just going to show you the bottom line. For me, I believe they're going to add. So from now, I'm not saying add from today when I'm making this video. I'm saying from the beginning of, so January 1st, 2023, where I believe they'll be, from that moment to the end of 2023, I believe they'll increase their cash without any other activity, increase by $40 million, and that they'll have positive earnings in 2023. But I've already mentioned that a few times. A few notes on that. So here at the bottom. So Adam has said he has that $100 million investment, right? He's got board approval to invest $100 million. We don't know when, we don't know what. And so that is cash. I mean, he may take that and use that as cash to, like when he got into Hycroft, which I love. I mean, what do you want to be in a crazy inflation time other than gold and silver? And who knows, what if they find lithium or something? So awesome, awesome investment. I totally trust him. I think he'll do awesome with the next investment. But that is cash. So I have not counted that here because I just don't know when he's going to do it. So in your mind, you may have to take out $100 million. But that's not something, I don't really consider that like cash burn, right? Because that is a strategic investment. It's not, a going out of business company having to try to pay some bills. That's not what that is. And if he does it well, then he's going to make more than $100 million on it. So that'll be cool to see. And then just a lot of notes on this. It's a forecast. I mentioned if you have a forecast, you're wrong. But due to the various timing of any financing decision that they make, any capital expenditures, maybe talk a little bit in a minute on something called CapEx and how that's different from operating expenditures. Those are those strategic investments. Um, Forecasting cash flows is a little tough for me. Again, I'm not on the inside. And so I'm just wanting to share this with you, with a sort of a tone of humility, but just share with you that I do feel very confident about their cash position. And really, I would, I guess, just say use this not as here are the numbers that they're actually going to land on. Use this as this is directionally the shape of what I see happening in their business. Okay, popcorn. So I talked about having that in there. I don't want Shorty coming and saying, well, you know, you're just doing this on a hope and a prayer. So I want to just go ahead and show the details. Um, I have assumed that by the end of 2023, they grab about a 2% market share based on market, I don't know, industry research and size of the pie and all that I've done. Um, but that's based on my assumptions around. I think when they are in grocery stores, whether that's bags, boxes of microwave popcorn, whatever, I think I know myself. I'm going to run to the grocery store and buy some. And anytime my family watches movies at home, that's what we're going to have. Um, but I've got to assume, hundreds of thousands or even millions of you are going to do the same thing, and that's just apes. Then, however many people, through marketing, through random chance, end up buying AMC popcorn. So I'd like to think 2% is a pretty low bar to set. I would hope that the team thinks they can beat that. So now you know again that I'm hopeful. I've been conservative here, and also I've backloaded that. So that's the second bullet in my forecasts. I'm assuming there's not much. Adam has said they're getting to that in 2023. Um, you know, I was pretty hopeful we were going to hit it in 2022. I respect the team. I totally get they want to get the flavor right. They want to get the packaging right. There's probably a lot of agreements with distribution points. The stores. So I love that they're taking time to get it right. But I'm also excited for when that comes. And so I've just sort of put that in the back half of 2023 to just stay conservative with that. And so then here's what's called the gross to net. So I'm suggesting maybe there's as much as 26 million. Now that includes, they're already live with Uber. They're already live with those, 3 times as large as a large bucket or whatever, those bags. And some of you have done some really awesome Twitter posts with those. So I'm not just saying this is just grocery store popcorn. He's talked about possibly kiosks, and so then if you add in Uber and the huge bags and all that, just total combination for the full year, I'm saying 26 million. And so you can decide, do you feel that's too bullish? Do you feel that's too bearish? What do you think it is? I've assumed a margin of 55%. Um, I think popcorn's got a pretty high margin, so I'd like to think this is reasonable, but full disclosure, I don't know what types of agreements they would have to have with grocery stores and what does packaging cost and all of that kind of stuff. So that's why I'm telling you what's in here, and so you can kind of decide for yourself how to up or down that from my forecast. And so that brings a cost of about $12 million and a net of about $14.5 million for earnings per share of about 2.8 cents. So if I go back, I told you my total forecast here is $36 million of earnings on the year with basically 7 cent earnings per share. And so you now know in that number how much of that I had as popcorn. Um, but remember, this is talking about revenue here. So like their $26 million of revenue, I had forecast. I guess I don't have the total number here, but it's a heck of a lot bigger than that. So what I'm saying to you is this percent is this percent of revenue is fairly small. So I'm not even worried about getting this number wrong because I mean you could even take out the whole number and they still have positive earnings on the year. So I just not too worried about it. But I did want to share that because I wanted to head off any kind of um, distortion and lies on that one. Okay, and then so last kind of big numbers eye chart. I won't go through this one too much, but I did want to share a little bit about expenses. So I'm actually going to kind of jump to the bottom, the bullets. So I mentioned that I believe they've got a pretty heavy fixed cost model. And so you can actually see And so part of why I'm going into the detail too, by the way, if I was still in some of my roles, and I've worked at a really, really big company, I mean, it's one of the Dow Jones 30 companies. And if I had seen this in a meeting, I would be poking at the team that was presenting this to me and saying, wait a second, you're telling me 25% revenue growth on 5% expense growth. Okay, let's talk that through. And I want to know if I actually believe that. And so let's talk about why that is. Um, okay, so I've separated that. I mentioned you have something called operating expense, or in in business you just call it OpEx, and then you've got CapEx, capital expenditures. So the CapEx, just think of that as a little bit more long term, a little more strategic. Sometimes there's tax implications like depreciation, sort of. And actually, I want to talk about depreciation here in a minute. Um, so on the operating expense, what I want you to see first off the bat is there's some of their expenses. I've got this going up almost 20% on this first bullet that I'll talk through, and that's an increase of $400 million of expenses at about the average of these items is up 17%. So they pay film costs every time they show a movie. You got to pay the studio. The studio gets their cut, and so I've seen over time. In fact, I'll just show you. Um, let's go here. Big old spreadsheet takes a second. Okay, got just a mess here, but I'll show you all the way back to Q3 18. You can see basically I've just got a whole mess of information. And then actually, if I go here, there's some other stuff behind that. Then this is what I was going to show you. You can see, go down here, expenses, film costs. Okay, so you can see based on revenue what their actual film costs were. I've kind of got other spots where I kind of look at that as a percent and everything. How is that growing? Is that shrinking? Um, Movies that run longer, I think, AMC starts to get to keep a little more of the cut on some of the out weeks. So that's been helpful. The theatrical windows are kind of increasing. But so all of these that I'm about to tell you about, you can just see I'm looking at history over time of if there's more movies, does that impact it? If there's um, more attendees per movie. So there's some of these move in different ways. But film cost is directly related to the films. I mentioned that is growing in my estimates in 2023. So of course, film costs would go up. Um, and so then operating expenses, that's just like I said, kind of keep the doors open, keep the lights on, heat the place, all that sort of stuff, and pay your employees. And then food and beverage costs. So those three, the actual cost of the food and beverage, so not the revenue, but the cost, the operating kind of keep the doors open, and the film costs, I've got averaging up about 17%. Um, and then, so here's where we get interesting though, because rents I've seen over time are relatively constant. There's some shifts, and so let me show you. Actually, let's go here. Okay, so in this one I didn't show the whole history, but I'll just show you some examples. So you can see the rent about 200 million, 205, 215, 215, 220, 220, then starts dipping back down, 222. So um, it's not climbing super fast, and so and you can see that's a sizable chunk um, of expense. And so if that's not climbing very fast, then and the other thing is just think through, movie theaters are in a way like an anchor store. So if you're at a mall, like my local AMC is at a kind of an upscale outdoor mall, and when I saw Maverick the first time, I took my family to a restaurant right there in the mall. Um, and we sat by this lake. It's kind of a cool spot. And the only reason I even went to that restaurant was because I was going to a movie. And we just ate there right before the movie. So you can imagine if you're a property owner of a mall, or in this case, like an upscale outdoor mall, and AMC is there and they're bringing traffic and your stores are doing better, you can negotiate some pretty favorable rents for the person bringing the traffic, because then you're going to make up those rents on all the other stores all around them. So that's why it's called an anchor store. And so that's part of my thesis as well, is that movie theaters are bringing traffic back. And I'll show you in a minute. I'll actually literally show you attendance over time and how it's increasing. I've got the hard numbers. So anyway, I've got rents just going up slowly. And then there's kind of an other line on their operating cost. You can see I've increased that 7%. And then depreciation and amortization, that's kind of a big expense line, which, by the way, really key takeaway here. If you've made it this far, and I haven't put you to sleep yet, um, that is not a cash expense. So the other thing you need to know is there's expenses in OpEx, sorry, in just overall in their expenses that it does not mean there's cash going out the door. In fact, like I used to own a rental home, and you can claim depreciation on property. Um, well, for me, that was actually a positive. That was not cash going out. That reduced my taxes. And so if you claim depreciation, the company has to show it as an expense because in theory, it means there's like investments or property that are kind of aging. And so they write it in as an expense. But it's also really what it is it's the government um, stimulating investment. So, okay, I invest, CapEx first, and then I start depreciating. Let's say I had a big investment I made. You even see that with like software and stuff like that. But anyway, the key point is when you see depreciation and amortization as a line item, that's not cash going out the door. So that's another thing I don't think Shorty thinks you know. And so that's also where I've gotten to, when I talk to you through my feelings about what their cash position will be, I'm able to take out depreciation because that's not a cash event. Okay, but I do have that going down a bit, so that means their expenses on that line item, and history shows that, are going down a little bit, and actually that makes sense to me too. But so that's an expense item that is going down. So then there's other in CapEx. There was a huge one-time expense. I'll just show that to you again. And again, you can get this from their filings in Q1 of this year. So you see most of these quarters, this negative actually means they're making money. That's income. But this positive means it was an expense. Um, I do not think they'll have this, one time. You can see all the other quarters don't look like that at all. And so, but that's in 2022, which means it's a pretty favorable comparison to 2023. So I've got a $120 million shift in overall in this other CapEx expense from 2022 to 2023. That really just think of that as reducing their expenses as well. So then that all of these things feed into this 5% number and start to help you understand why I landed there. They're borrowing. So recently they refinanced quite a bit of debt. You remember a couple quarters ago. And then they've also paid down a little bit of debt a couple times. And so I've got a reduction overall in their borrowing costs of 32 million. That's not huge as a percent, especially of their overall expenses. So we don't have to spend a ton of time there, but it's based on reality. And then you can kind of see these other items. So this just kind of walks you through why I believe they've kind of got their arms around expenses, really, guys, is my point of view on them. And so as they're almost going to have this like dual leverage of raising revenues in 2023, maybe even triple leverage. And what that is we see traffic returning. Actually, I can think of four things. I think we see traffic returning, a reduction of COVID headwinds. We see more movies coming out, the Hollywood supply chain ramping up. We see inflation raising ticket prices. Gosh, I'm thinking of like five or six levers now. We see popcorn coming out. And I don't know, I had one or two more in my mind, but I've talked too much now and they're gone. But so you get the point of like why revenue is going to be increasing quite a bit. Inflation is going to be raising ticket prices, if I didn't already say that one. But their costs are going to be somewhat steady, partly due to one-time costs, partly due to some improvements, partly due to fixed costs. And so I feel pretty good about this number. Okay, so then overall earnings, like I said, landing on that positive number and cash increasing on the year. So I want to show you just some terms. We're rounding the corner. I'm already jumping all the way back into the appendix, but I think there's some really helpful stuff here I want to show you. And again, I'm going to post this probably on Reddit and Twitter. But let's look at this is going to really illuminate some stuff. So I mentioned, I've got all this history. Let me just show you that a little bit visually here. So here is food and beverage spending per attendee. And you're getting an idea of the drivers in their business. And by the way, how that's looking more and more and more healthy. In fact, I think as movies return, AMC is actually going to be a much stronger company than pre-COVID even. And I'm going to show you a series of charts here to show why that feels kind of obvious to me and why Shorty is just engaged in lie after lie after lie. It should be pretty clear from this. Um, First off, to the left of the green bar is actuals. These are real numbers that have been filed with the SEC, okay? And you don't have to trust me, bro. You can go find these. Everything on the right is my forecast. All right, so look at how much literally per person people have been spending on food and beverage. So you're all the way down at like $4.50 here in 2018 and a little uptick in 2019, but not much. Then boom, look what happened from COVID. Now, granted, this wasn't very many people, right? Because Q1 2021, we still aren't. Oh, you can see that I've skipped, by the way. That's partly why there's such a jump too. I've skipped from 2019 to 2021. But in that time, so just squeeze 2020 out of there because for some of these charts, it's just not relevant because of shutdowns. Um, but you see that by the time we're kind of back into post-COVID business, we've gone all the way from about $4.50 a person to $7.50 a person. Insane jump. Now that didn't hold. Part of it I would think is myself and you and others were just super excited to be back in the movies. We bought all the snacks and all the drinks and everything. So it trailed off a little bit, and that actually, by the way, I've tracked through the data. A lot of this trail off, I think, is more Europe ramping up. If I remember right, maybe we can poke fun at ourselves, but us Americans, we like our salts and our sweets, so and maybe some of our beers and wines too. So as Europe ramped up, the weighted average of the total spend, per person kind of went down. But then look at how since Q4 of 21, it's continued to climb a little bit. So I think this starts to show inflation. We're going to have to pay more for some things. That's just how the world's working right now. But that's in AMC's favor as well. And then you can see, really the trend is a little bit steeper than what I've forecast. I've just forecast a little bit steady growth. I think it's even just like 3 cents per person per quarter or something. It's not much I've forecast. Okay, this is a really, really big one. So the total actual movie count that Hollywood's been cranking out. You can see pre-COVID, and again here we have this skip of 2020, but pre-COVID to during COVID. So whereas food and beverage is a massive jump, we're all willing to spend a little more per person now. Hollywood, the supply chain shut down, and it takes time to ramp up a supply chain again. I think you guys have all learned that. We have all learned that through COVID. And but look at what's happening. It's kind of evened off. And think of this as a stunk chart. Like if I drew a little line right through here, you'd kind of see this is an upward trend. Granted, everything over here is my forecast, so you could even kind of say it's been a little bit flat lately. But if you think about Hollywood again as a supply chain, and you think about the time it takes to greenlight a project, finish a script, do pre-production, get all your actors. I'm a little out of order here, but do post-production and all your filming and everything, get the marketing, get the distribution. It takes a long time. And so here's why I'm excited. If you think about from the time we got, let's say, Spider-Man was successful, Quiet Place was over here, Fast and Furious was successful. There's a lot of bigger movies that were doing well, and Hollywood started to say, hang on, it looks like theatrical windows are working. Um, so let's say someone saw Spider-Man. I'm a studio exec, and back here in Q4 of 21, I'm like, holy cow, that's huge. I start to greenlight some projects, and maybe some of those we start to see in 2023. So, and beyond, by the way. So this chart is not, I've already given you the full 2023 outlook, but now start thinking about 2024 and 2025 as the supply chain catches up for movies and what that's going to look like. And I think that holds out. So I'm going to come back later, but just real quick, even in 2023, if you just look at these buckets again and you see the significant growth in the amount of movies, we are seeing more movies come back and more big movies come back. Okay, so ticket price per attendee. And I think, by the way, why this matters, the more movies, the more attendees. And so you're seeing when people come, they're spending more on food. And oh, by the way, when people come, they're spending more per ticket. So if there's more movies and more people come, what do you think happens, Shorty, when more people are coming and they're spending more on food and they're spending more on tickets? I don't think you're going to be too happy about that, bud. So I'm going to be thrilled. So ticket price per attendee, again, actuals on the left, forecast on the right, you can see how significantly it's ramped up. So we are in a post-COVID movie industry that is drawing significantly more per person in both tickets and food. So you can kind of view this later, but and you can see based on the growth in the past, I have sort of tailed that growth off. In fact, you can see it's pretty flat here. I don't really think that's going to be true. To be honest, I think that's upside to my forecast. With inflation, if ticket prices go up, if that foreign exchange headwind kind of stops in Europe, I actually think you could see this go up, in which case you would have to take my forecast up, and they look even better. Okay, so AMC's specific attendance per movie. So now I'm not talking about the whole industry. I'm talking about, actually, sorry, the ticket price per attendee is AMC, and the food and beverage per attendee is AMC. Of course, the movie count was full industry. But AMC's attendance per movie, you can see, is way higher. So like Q3 of 18 was about 220,000 people. Here's Q1 of 19, it's about 265,000 people per movie. Whereas, lately, let's see, here's an actual from Q2. I think if I hover, well, it's not showing it in presentation mode, but, you're at like 350,000 people per movie. It's gone up significantly. And so, um, I'm not assuming that's going to keep growing because if there are more movies, some of those will be lower attended. You get some indie movies and things like that, but I think that's also going to be fantastic for the industry. Um, but so I'm assuming a little bit down, you can kind of see, but I think that's another big sign that people are ready to see movies is there's significantly more people per movie. It's also just, let's be really honest, a sign that more of the movies out there are the big blockbusters. And so we will start to see, I think, a green light of a few more smaller movies and mid-sized movies. But I just think this is still really interesting, and I'm going to track it over time. And then what's the US box office per movie? So it's actually, I drew a separate, so these dotted lines are the trend lines. I drew a separate like trend to show what's actually been happening versus what I'm forecasting. So because the trend line actually uses even my forecast. So it's just kind of the way I had done these charts in Excel. The real trend is much steeper. And so you can see that I have not assumed that growth will continue. And that's really the same discussion we just had on how many people attend per movie, how much money is there going to be per movie. But keep in mind what I said about tickets. So if ticket prices go up faster than I think they will, then you're going to see obviously the box office numbers also going up faster than I had said. Okay, and then I'll post this helpful links, just some examples of like, there's a website where you can track a daily, quarterly, monthly. You can go dig into specific movies. You can go back and look at how did the Indiana Jones franchise do, or how has Fast and Furious been doing. And so you can kind of come up even with your own ideas of how big the movies might be. And then, of course, be thinking about, oh, well, what if ticket prices go up? And what if this franchise has grown? Like Dune 2, I expect to be bigger than Dune 1, as just another example. So, um, and then the link to the 2023 movies list. And then finally, I'm linking up where you can go to look at AMC's financial documents. I'll probably do a future, let me just even give you an example of one of those. I'll probably do a future walkthrough of financial documents to explain how to read these. I've taken master's level classes on just reading these things. And it's honestly simple once you understand it, but I'm sure, you kind of look and you're going, oh, geez, look at all these pages and whatever. I tend to jump to just a few things, but I'm not going to cover that today. This is already way too long, and I'm getting tired. You must be tired of listening to me. So, what I just want to come back to, 2023 is a time to be excited, frankly. The actual movies that are coming, I'm a movie fan myself. I can tell you, I'm going with my family of five to almost everything you see on this page. There's a couple that won't be appropriate for my 9-year-old, but other than that, I'm going to almost all of these myself, and almost all of them with five of us. And we buy concessions and we pay the ticket prices, and I'm an A-list member. And gosh, even for casual fans, there's going to be a lot of things to celebrate in 2023. And that is going to translate into strength for AMC's profit and loss statements. And it is going to translate into strength for their cash position and their balance sheet. And you're going to see Adam and the team, you know, if they haven't built your trust by now, I'm just going to be honest, I don't know why you're in this play. I trust them, and you're going to see them, I think, lead us forward from strength to strength. You know, I mentioned 2020, they had to fight to just stay above water. 2021, we joined up together. 2022, the market kind of proved that people still want to attend movies and that a theatrical window makes sense. 2023, I think it starts to really all come together, in my opinion. And who knows what happens with Ape. So a lot of really great things. The key takeaway is AMC is not running out of cash. AMC should be fine. Um, and that is tied to specifically what Hollywood is up to. And there's a lot to be excited about. So just thank you all. Appreciate you for sticking with me this far. And let's go.